Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Jackson Hole in focus as US stocks fall for a fifth straight day and traders trim those bets for a September rate cut. We're going to preview the speech from Jerome Powell. Trade ties rebalance. The EU and US outline plans that could cut tariffs on European cars and offer discounts on steel and aluminium within weeks. Plus, Nvidia hits pause on its H20 chip, reportedly telling suppliers, including Samsung, to stop work on the AI processor after Beijing urged local firms to avoid it. So there is only really one story for these markets right now, and that is the build-up to Jay Powell and the speech. 10 a.m. New York time, out of course, Jackson Hole and Wyoming at that conference, and that is where the focus for markets will be. Will this be a Fed chair who pushes back on the expectations for a rate cut in September or confirms that view? We've heard some hawkish commentary from some of the Fed officials speaking, of course, at Jackson Hole. And some of the data yesterday out of the US also coming in and showing that resilience is still there, particularly when it comes to the PMI data. Markets then fading some of those bets, now expecting about a 70% chance of a cut in September. Still, 2 cuts priced in by the end of this year from the Federal Reserve. Let's see how that adjusts through the day. European futures then down 0.1%, but again, a bit of a holding pattern until we get some clarity from Jay Powell. FTSE 100 futures, we've had record highs this week, pointing higher modestly just by 4 points so far. S&P futures, flat. Nasdaq 100 futures, also range-bound. Worth noting again, S&P futures, or S&P, has been down 5 straight days. Let's see if that turns around today with some more optimism. Let's flip the board and have a look cross-asset. Of course, the focus will be on treasuries, particularly at the front end. The benchmark 10-year currently yielding 4.32. Not a lot of movement across the treasury curve right now. Euro-dollar out 1.15. Brent trading just marginally softer at $67 a barrel as Peter Navarro takes aim once again at India and its purchases of Russian oil. And gold down 0.3% on the yellow metal. Let's cross over to Asia right now. Min Min Lo standing by for a check on the Asian markets. Min Min.
Hey, as you said, Jackson Hole, the only story in town, and we continue to see the Asian Pacific benchmark trading sideways for another day. But the Kospi leading gains today ahead of the first ever US-South Korea summit taking place next week. And so we're seeing a lot of foreign inflows into sectors like chips and shipbuilding. The TAIEX is on offer, really dragged down by TSMC on the back of that news that Nvidia is asking some of its suppliers to halt production on the H20 chips, which we'll get to in a little bit as well. But flip the board, we're taking a look at Japan markets today because we got the CPI data out, 3.1%, beating analyst estimates of 3%, but far higher than the BOJ target rate of 2%. So that continues to cement the idea that the BOJ is indeed behind the curve in hiking rates. And of course, all eyes on Jackson Hole, whether that provides any further window guidance on the pace of this rate hike expectations in Japan. We continue to see the yen weakening as well. This on the back of traders trimming down their expectations of a Fed rate cut. And if the Fed remains non-committal, we could see further vulnerability on the yen. But flip the board, take a look at how China is faring, because China is always telling a different story here, going against the grain. Once again, we continue to see the liquidity rally. Morgan Stanley saying that this rally could possibly last throughout the summer. But we're keeping an eye on the Hang Seng because we're getting that semi-annual adjustment to that index. And POPMA, that breakout star with the mini Labubus, really in focus. A lot of expectation that maybe that could be the latest addition to the Hang Seng index after markets close today. But flip the board, we're also keeping an eye on tech stocks. As I mentioned earlier, Nvidia being asked, or reports that it is asking some of its suppliers to halt production on the H20 chips as China urged its local companies not to buy those chips over security concerns. And what's bad for Nvidia is good for China's domestic tech stocks. Here we are seeing SMIC up 7%, Capricorn up by 15%. Tom.
Okay, a significant rally, as you say, in the domestic chip players in China on the back of that news. And I love the fact that you tied in the Labubus as well. I feel like that should be a daily occurrence. Minimum low in Hong Kong. Thank you very much indeed. China and Chinese equities bucking the trend then. So central bankers and economists are gathered at the Federal Reserve's annual Jackson Hole conference, of course, amid inflation concerns and growing political pressure on the Fed. Traders will be listening for any hint of what policymakers may do at their September meeting.
I don't see any chance that there's a nod toward a September cut or any promise of a September cut.
The caution I would give, if they do move in September, I don't think that's the start of a cycle. I think it's an individual decision. Then they'll wipe the slate clean and take the next 6 weeks, try to understand these cross currents again.
I think they're modestly restrictive. I'm still trying to find ways what's being inhibited in the economy from where our policy rate is today. But I think we're on a good path.
For sure, it feels to me like it's a live meeting. As you know, before April 2nd, before we got some uncertainties coming on the policy side, I believed that we had pretty stable full employment, that inflation's coming down to target.
OK, for more, let's bring in Bloomberg's Jill Desis. So, Jill, all focus, of course, amongst traders is on whether or not Jay Powell confirms or pushes back on pricing around September. And yet the Wall Street Journal coming out with a report saying the bulk of this speech is going to be focused on whether or not this is a Fed that is looking to change a framework dating back to 2020. So could markets be disappointed? Is he going to give a nod either way?
Yeah, Tom, I think that's incredibly possible, right? I mean, look, I think that one thing that markets are really looking out for here is the fact that Powell has historically used the speech at Jackson Hole before to give those types of hints. I mean, we saw that a bit last year, with the idea that, the Fed was going to start making some moves there. We saw that back in 2022 as well with some pretty hawkish comments back then. So, I think, history shows that that is possible for Powell. But this time around, I think we're in a really tricky situation. I mean, certainly you heard some of those comments from the Fed, from some of those former and current Fed officials. I also thought one other thing that Goolsbee said that was quite interesting was he pointed to some of that recent data, showing that data around inflation, calling it, kind of dangerous, hoping that it was a blip. But it does really show you, alongside the FOMC minutes from the last meeting that were just published, that inflation still is a pretty significant concern for a lot of these Fed officials. It's, still, kind of tying in there. I will obviously concede that those Fed minutes, are from a meeting that happened before those big labor market revision data came out. But still, it does kind of show that that's still really critical here. So does that mean Powell gives us any kind of a hint? I'm not sure. It might be that markets and then ultimately Trump, who's obviously really been pushing for some action here, might be disappointed with the speech.
Yeah, well, to your point, Jill, arguably there are two men who loom large over this meeting. One is Jay Powell, one is President Trump. And we only need to look at what he's been saying in terms of targeting Lisa Cook. This is a president who has the Fed firmly in his sights.
Yes, I mean, look, Tom, I think that is certainly looming over the meeting. Obviously, all of this sort of controversy and drama surrounding Lisa Cook. So the Trump administration really accusing her of mortgage fraud, trying to pressure her to resign. I think there's also some thought of, from Trump's perspective of whether, Powell could be sort of in action in there. And, obviously, we've got that against the backdrop of throughout the entire year, Trump has been incredibly sort of targeted and incredibly critical of Powell himself. And, has at various points suggested that he should step aside. So that is something that clearly is kind of looming over this meeting. I would also point out, though, that in Jackson Hole, you have Powell and these other Fed officials who are really surrounded by a lot of their central bank peers from around the world. We've got Christine Lagarde attending. You've got Bailey from the BOE. You've got Ueda from the BOJ. So I think, sort of in that context, really interesting. It will be interesting to see whether or not Powell actually uses any portion of his speech to, talk about, central bank independence or anything like that. Yeah. I guess we'll have to see. But yeah, that is a large presence sort of looming over this meeting.
OK, a great setup to the event of the day, of course. Bloomberg's Jill Desis, thank you. Sticking with the Fed and clues for the rate path, we also spoke to Chicago Fed President Austin Goolsbee about the inflation outlook.
The last inflation report that came in, where you saw services inflation, which is probably not driven by the tariffs, really starts shooting up is a danger. That's a dangerous data point. I'm hoping that that's a bit of a blip. So I think we still have a fair bit of information that we're going to get before September or the whole fall to determine what path we're going to be on.
Let's bring in Bloomberg's Valerie Teitel right now for a reaction to what we've been hearing from Fed officials and how markets have been adjusting their views for September. Val, what stood out to you from some of the commentary yesterday?
Look, it just seems to seem that the market is very sensitive to anything hawkish, whether that's Fed speak or whether that's better than expected data. Yesterday really was no different. We had a comment also from Fed's Beth Hammack, she's a regional Fed president, saying that she does not see the case for the September rate cut that the markets are pricing in, given the current data. So a lot still really relies on these next data prints that we get before September 17th, before the next Fed decision. Even hearing from Goolsbee there, he's almost suggesting that he needs to see in the next CPI print that this services inflation pickup was just a blip in order for him to vote for that September cut. But we definitely saw a repricing in the front end yesterday. Two-year yields were higher, and take a look at the odds for a September rate cut. They have been pared back what it seems like every day since that hot PPI print last week. We're now standing at 75% chance of that September rate cut. And this is going to be very pivotal because the front end pricing for September is really going to be what the market's going to be watching for the reaction post Powell's print. But the rise in front end interest rates is keeping the equity market at bay. We've now had 5 straight sessions of the S&P 500 closing down in the red, and over that time frame, S&P 500 futures have taken 160 basis points off of their rally.
OK, Bloomberg's Valerie Teitel on the higher rates, higher yields at the front end and the linkages between the equity market challenges, at least in the last few days. Valerie, thank you with that setup as well in terms of how markets are reacting, positioning for Jay Powell later today. Meanwhile, in terms of trade, some updates that came through late yesterday. The US and EU outlining trade plans that could reduce tariffs on European cars to 15% within weeks and potentially offer discounts on steel and aluminium. White House trade advisor Peter Navarro credits a breakthrough in Ukraine talks for paving the way to the deal.
I can think of no deal more important than with the European Union. This is like a really important mountain to climb, and we climbed that. And President Trump got up to the top of the mountain today. In many ways, the Ukraine situation has been a total wake-up call for Europe.
For more on this, let's bring in Bloomberg news desk editor Ballance Pence in terms of the details and the context. What have we learned so far then? We had the headline deal on 15%, but there were all these unresolved questions. How many of those questions have now been answered, Ballance?
Well, it's certainly a major development, Tom. And as you said, we see the two sides now kind of filling in those gaps left in the broad agreement reached about a month ago. And crucially, it sets benchmarks for Europe to get those reduced tariffs for some very important product groups, including cars, but also pharmaceuticals and semiconductors. And it also opens the door for more reductions in other areas like steel, aluminum, and derivatives. And now we have a sort of choreography of what each side needs to do legislatively to really lock in those tariffs and go forward from there. There's still a lot of work that needs to be done to get there, especially on the European side. But what we saw overnight is certainly some interesting and very important progress.
And Balash, if we take a step back, what is the broader significance of this agreement for the US-EU relationship?
Well, we certainly seem to have come a long way from April when the two sides were lobbying threats at each other. President Trump was very harsh on the EU. We heard kind of a groundswell of voices in the EU calling for tit-for-tat escalation of tariffs from the European side. And now both sides seem to be happy. We heard Peter Navarro talk about what an important negotiation it's been with Europe. We saw Ursula von der Leyen praising President Trump and his leadership in getting this agreement off the ground. And as we also heard from Peter Navarro, the two sides seem to have come closer during those very high-stakes Ukraine negotiations at the White House earlier this week. So there seems to be a lot more unity on the two sides of the Atlantic right now. And that certainly seems to bode well for the future negotiations when they get down to business and try to work out the rest of those remaining issues.
Well, Ballance, on that point, and briefly, what remains outstanding in terms of what needs to be nailed down at this point?
Well, there's the large issue of the European investment in the U.S. that was part of the original deal, the European energy purchases and potentially defense purchases. And the European side would very much like to get some progress on beverages, especially champagne and whiskey, that have been left out of the agreement. That's something that a lot of European industry leaders are still pushing for.
Okay, fantastic. Bloomberg's news desk editor, Ballance Pence, on the latest. Some movement there, some progress in terms of this EU-US trading relationship, with more work still to be done. Joining us out of Hong Kong with the latest on that front. You can get a roundup, of course, of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the terminal. Front and centre in terms of the coverage right now is the chip market reaction, of course, to the news that Nvidia, the reporting at least, that Nvidia has asked some of its suppliers to halt work on the H20 chip. Coming up, we'll get more on that story. In terms of the H20, what it means for Nvidia's prospects in China, what it means for China's positioning around its own chip sector, and what it means in terms of the adjustments with semiconductor names in China jumping, but Nvidia likely to be under pressure. Plus, Oxford Ionics unveiling its shiny new state-of-the-art quantum computer here in the UK. We're going to be speaking with the firm's co-founder and CEO. It's a company that claims to be at the forefront of quantum computing and those breakthroughs. That conversation coming up later in the show. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Friday, everyone. It's not just the Fed that is in front and centre for these markets. It's also what's happening in the semiconductor space, with new lines coming through on Nvidia, reportedly instructing suppliers, including Samsung and Amkor, to halt production of its H20 AI chip. The tech publication The Information says this comes after Beijing advised companies to steer clear of those H20 chips over security concerns for the chip, which has been specially designed, of course, for the Chinese market. Nvidia, for its part, has repeatedly denied that it adds backdoors into that semiconductor. CEO Jensen Huang has been speaking to the media in Taiwan on the back of this reporting. Take a listen.
U.S. government, the Trump administration, has approved licenses for us to export H20s to China. Recently, China asked some questions about some security backdoors in our chips. We have made very clear and put to rest that H20 has no security backdoors.
Our Chief North Asia correspondent, Stephen Engel, joins us now for the latest. And Steve, as you well know, this isn't just a story about one single producer of chips. It's also a geopolitical story. What do we know, Steve, about the latest reporting in terms of the H20?
Well, it raises a lot of questions about end demand for the H20, which Nvidia was banking was quite high in China. It's been a seesaw, of course, story where they made the H20 as a stripped-down version of the Blackwell AI accelerator for the China market. It then got caught up in the Trump trade curbs back in April, only to be allowed to apply for those export licenses and resume shipping to China in July. All because, again, this was part of China's main point in trade negotiations. They did not want to see these curbs on advanced chips. So they got their wish. Jensen Huang, even in July, went to Beijing, and they made that announcement. Now, as we're even hearing from Jensen Huang there in Taipei this morning, essentially China is raising its own concerns about the chip, and various ministries and regulators are ordering their companies not to order them anymore. So that leads to that story that was in The Information, saying the big suppliers like Samsung, which makes the high bandwidth memory chips that go into these accelerators, the H20 and others, as well as Amkor, which does the advanced packaging, The report says inventories are stacking up there as demand has dropped off from China. So again, this is a seesaw story that obviously is a great concern to Jensen Huang and Nvidia. He did not mention that report from the information. He did say, though, he was going in to talk to TSMC about the next generation of accelerators, the Rubin. But again, we all know that TSMC is the production line for those H20s. So I'm sure he's going to be talking to them about that.
Okay, so we watch for any further comments from Jensen Huang, who is on and remains on the ground in Taiwan, of course. Steve, is it how do you see this from Beijing's perspective? Is this that they're using this as a leverage for ongoing negotiations with the US, or is this a commercial decision to try to ensure that their companies are buying Huawei chips instead of Nvidia's H20? How do you see the framing around the rationale from Beijing's perspective?
There's positioning always from the Chinese, obviously. So there's some negotiating tactics here, as well as, again, the truce has been sort of pushed down the road a little bit, and we're still awaiting any kind of summit between Donald Trump and Xi Jinping coming up in the autumn here, either on the sidelines of APEC or ASEAN, or maybe even a trip to Beijing. So there's going to be some jockeying for position. But again, I think you're getting a number of different regulators, and dare I say, hawks in Beijing, saying, wait a minute, the Trump administration has basically is taking 15% of revenue from these chips from Nvidia and AMD and others into China for their own coffers. So it's not just a commercial agreement between China and Nvidia. The U.S. government is involved. So there's concern that there are backdoors potentially for Chinese data to get into the hands of the U.S. government. So those voices in Beijing are definitely being amplified, even though, as we just heard Jensen Huang saying, there is no backdoors on the H20 chip. It raises the question next week. We have earnings from Nvidia. We are likely to get more guidance from Jensen Huang, especially also on the next chip that they had been simultaneously developing for the China market based on the Blackwell RTX Pro 6000 architecture. He did mention that today. He said it's up to the U.S. government where they're going to allow this next generation of chip, a scaled-down version of Blackwell, to China.
OK, Stephen Ingle, our chief North Asia correspondent, thank you on the latest twists and turns in the semiconductor story and the geopolitics, of course, with that overlay. Still ahead, we will speak with Oxford Ionics. This is also part of a geopolitical story. Co-founder Chris Ballance about making commercially valuable quantum computing a reality as that company unveils its latest full-stack quantum computer. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Bloomberg understands that Meta is hiring another key artificial intelligence executive from Apple, even as the social networking company prepares to slow its recruitment. We are told that Frank Chu, who has led Apple AI teams focused on cloud infrastructure, training and search, will be joining Meta Superintelligence Labs. Chu follows several of his colleagues to Meta, which has also hired the head of Apple's AI models team. And in a court filing, OpenAI says that Elon Musk identified Meta boss Mark Zuckerberg as one of the people he communicated with about financing a deal to purchase the maker of ChatGPT. OpenAI says in the end, neither Zuck nor Meta participated in the $97 billion bid. The company's board formally rejected Musk's bid back in February. Plenty more coming up. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. Happy Friday. I'm Tom McKenzie in London. These are the stories that set your agenda. Jackson Hole in focus as US stocks fall for a fifth straight day and traders trim bets for a September rate cut. We will preview Jerome Powell's speech in Wyoming. Trade ties rebalance. The EU and US outline plans that could cut tariffs on European cars and offer discounts on steel and aluminium within weeks. Plus, Nvidia hits pause on its H20 chip, reportedly telling suppliers, including Samsung, to stop work on the AI processor. That's after Beijing urged local firms to avoid it. So 5 straight days of losses. US futures pointing to further downside. Will Jay Powell reset the floor and the trajectory for equities? You've seen higher yields, certainly across the front end of the curve, and that has weighed on the stock story. US futures then a little softer, currently down about just 3 points so far on the S&P 500, the S&P E-minis. Nasdaq 100 futures pointing lower by 31 points. Here in Europe, you ended flat yesterday. European futures now pointing lower by 0.1%. FTSE 100 is still showing that resilience, having notched up fresh record highs this week. FTSE 100 futures pointing to very modest gains of 2 points. Let's flip the board and have a look cross-asset then. The big question clearly is whether or not Jay Powell will lock in this interest rate cut in September or push back. We have had hawkish commentary from some Fed officials and as well slightly stronger data out of the US yesterday, particularly when it comes to PMIs. The benchmark US 10-year currently yielding 4.32, euro-dollar out 1.15. The single currency a little softer by 0.2%. The dollar is stronger in the session. Brent trading weaker by 0.1%, and gold also a little softer on the yellow metal, down 0.3%. So back to our top story today. Jackson Hole in focus, of course, and clues for that rate path out of the US. We spoke to Chicago Fed President Austin Goolsbee to get his views about the inflation outlook.
The last inflation report that came in, where you saw services inflation, which is probably not driven by the tariffs, really start shooting up, is a danger. That's a dangerous data point. I'm hoping that that's a bit of a blip. So I think we still have a fair bit of information that we're going to get before September or the whole fall to determine what path we're going to be on.
OK, let's bring in Bloomberg's Valerie Teitel right now. Val, it wasn't that long ago, a few days ago, when we had a 90% chance of a cut in September. That has been paired by the markets. What's behind that adjustment?
Look, it's been pared back, and we have it echoed by these hawkish Fed officials. We had no one yesterday raising their hand saying they think they should reduce rates in September. You heard from Fed's Goolsbee right there, calling the previous inflation print dangerous and saying essentially he needs more evidence that that services inflation rise was a blip, in his words, in the next inflation print. We also heard from Fed's Hammock. She said that given the current data, she doesn't think a September rate cut is warranted. You back that up with also Fed Schmid. He essentially said the same thing, that given the state of the data, that he is not penciling in any move on the policy rate just yet. Also, we heard from Bostic, him saying he's only penciling in one rate cut for the remainder of the year. Take this all together, and we are seeing a repricing when it comes to that front end rate expectation. We had a rise in 2-year yields yesterday, and as you mentioned, the rate cut odds for this September meeting have gone all the way down to 75%. Tom, this number was over 100% just a week ago before the hot PPI print. It does seem to be like something has changed in the market. We are very sensitive to any hawkish signals, whether that be that beat in the PMI data as yesterday or this hawkish narrative. But the rise in the front end yields is keeping the equity market at bay. We've had 5 straight days of losses for the wider U.S. equity market. The S&P 500 dropping over 1.5% in that time frame.
OK, yeah, maybe Jay Powell just reminds the audience that there is still more data to come in terms of inflation and jobs before that September decision. Bloomberg's Valerie Teitel, thank you very much indeed. So Valerie mentioned, of course, Kansas City Fed President Jeffrey Schmid and his comments saying that American businesses are showing renewed optimism that is filtering through to the labour market and putting the focus back on inflation. Schmid spoke with us from Jackson Hole about the economy and growing political pressure on the Fed.
I'm a little philosophical about the whole conversation of Fed independence and where our role is in the American economy. We're almost 250 years old as a nation. I think there's something to be said. We were built on words, and we continue to debate those words legislatively and judicially. Whatever friction we might have with other branches of the government, I think great steel's tested by fire. So we can always be better. We can always do this better. But I think the nature of independence, and I think, don't believe me, believe other nations that have central banks and don't. It seems to work, but I'm always open for the conversation of how do we make it better.
Well, the big question for everybody, especially for Wall Street, is what happens on September 17th?
So this is, as you know, kind of an interesting month because we've got Jackson Hole and then we've got quite a few weeks of data to kind of pull in. So I'm really, I think everybody's quite interested in some of the maybe the prints that happened in the last couple months and kind of where they go from here. So I'm like everybody. I think there was some fascinating conversations at the last FOMC. As you know, there were a couple of dissents. I think my interpretation of what's happening, especially in the labor market, is that the first couple quarters, a lot of business people were just saying there's uncertainty enough, and I think they kind of cooled a little bit on the higher side. But the most recent couple weeks that we've been talking to businesses in the district, there seems to be a burgeoning optimism again, that they've kind of digested and they've been agile enough to try to work their way through some of the new policies from the administration, and maybe going forward, maybe we'll see a little bit of uptick. That said, I still believe that the inflation number is trending closer to 3 than 2.
Well, we saw that in the minutes that, in general, the Open Market Committee felt that inflation was a bigger danger at this point. Would you say that's your view now?
It would be my view now. I think with an understanding that what may have happened in the first couple quarters on the labor side, which I think concerned several people were on the committee, and me included. But I think this PPI was interesting, that print was interesting, but I really believe that when we talk to a lot of folks in our district, is that if you had to kind of lean or have a bias toward it, would be on the inflation side.
Kansas City Fed President Jeffrey Schmid speaking with Bloomberg's Michael McKee, of course, at Jackson Hole. Now to Germany, where memories of hyperinflation kept investors on the sidelines for decades. The mood is finally shifting. The stock market is booming and investors are finally piling in. For what's driving the surge, let's cross over to Bloomberg's equities reporter Isolde McDonough in Frankfurt. Isolde, Germany not really known for its share of mom-and-pop investors, for retail investors, but things are starting to change. The DAX is up, 20% year to date. What is drawing them into the market? Is it simply these kind of record-breaking runs that we're seeing in terms of German equities?
Yeah, so as you mentioned, Tom, and good morning, the DAX is up 20% year to date. It's also been up the past, 2 years before that as well. And I think that that's giving an idea that, stocks are something that people might want to invest in Germany. And also with ETFs, which are seen as safer, people are really piling in now. And we've seen 3 million Germans invest in 3 years, which is pretty exciting, yeah. But I think it's also, worries about things like pensions here. There's been quite a narrative that the pension system here is not maybe working as well as it could. You've got, current workers paying for current pensioners, and there was a study that by 2050, you might have one worker paying for 2 whole pensioners. So, I think things like that have been really worrying people, and they want to make sure that their future is safe and the future of their children is safe.
Okay, so a bit of fear and greed factoring into this move with 3 million. You said 3 million additional investors in Germany. What have investors been? What have these investors been? These mum and pop investors been telling you then, Isolde? What has kind of changed in terms of the attitude amongst this crowd of investors?
Yeah, I mean, I think they're sensing some opportunity here, and also, I mean, if you go on the U-Bahn or something like this, you see these ads for get rich, make some money, and you've got organized by, banks who have platforms where you can trade, and you also have finfluencers, and we spoke to an 82-year-old finfluencer when we were writing this article, and he was very excited because he said, finally things are looking up. He'd been a banker before, and he'd always complained that German people were a bit too reticent about investing in stocks, and he sensed a change. And I think these things like TikTok and Instagram, you can really reach people, and young people, and people who are maybe less scarred by Germany's history, which of course after the First World War you had this hyperinflation, and I think those memories they continue, and Germans have always been, very, very good savers, instead of taking more risk. But yeah, no, the people I spoke to, yeah.
No, I love the fact we have an 82-year-old finfluencer who is maybe one of the catalysts over in Germany for this greater exposure to German stocks and global equities. Isolde, great reporting. Thank you very much indeed. You can get more of this, of course, on Bloomberg.com and on the terminal. Isolde McDonald in Frankfurt with that reporting. Coming up, we're going to focus on quantum computing, the progress that's being made there, the geopolitical overlay to that story, how it positions the UK and what it means for businesses as they start to adopt this technology. Oxford Ionics unveiling a brand new state-of-the-art quantum computer right here in the UK. We'll be speaking to the firm's co-founder and CEO next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Oxford Ionics, a world leader in trapped ion quantum computing, has released a full-stack quantum computer. You can see it being pieced together there on your screen. It's called Quartet to the UK's National Quantum Computing Centre. The delivery marks a significant step forward in making commercially valuable quantum computing a reality. Joining me now is Chris Ballance, the co-founder and CEO of Oxford Ionics. Chris, thank you for your time. How significant is this then, and what does it do in terms of moving us forward to commercially viable quantum computing?
Good morning. This is a really big step forward. Most quantum computers to date are built up in labs. They're not deployed in the field. And this is one of the first quantum computers that we can assemble, test, and then pretty much drop ship, go deliver to a customer site, commission, and deliver just like conventional high-performance computers. And this is the thesis of Oxford Ionics. We've always wanted to build quantum computers with the world's highest performance that we can deliver robustly in the field.
And clearly, it's a win for the UK, isn't it? Chris, how should we understand the time frame in terms of when we actually start to see a real commercial benefit from this technology? Are we talking 2 years, 5 years? What time frame are you working on?
So bottom line up front, 2 to 5 years. The thing that's really important to understand about quantum computing is just how fast the performance changes from interesting but a side project to everything. So right now, the quantum computers we're building about match the largest supercomputers on Earth for some very narrow sets of problems. The quantum computers we're going to be releasing next year with 256 qubits, these systems won't just outperform the largest supercomputers that exist to date, they'll outperform the largest supercomputers that humanity will ever build. If you look at the amount of power you'd need, just power alone, to build something with equivalent performance out of conventional technology, you need about 1 billion times the amount of electricity the Earth currently generates. So these systems, in a year or so, will be the best computers you can ever get.
These are mind-boggling numbers and hard for the layperson to kind of wrap their head around. And you and the team have set yourself some very ambitious targets, and you point to 2026 in terms of the number of qubits and the power that gives your compute then. What are the biggest technical bottlenecks at this point, Chris?
Well, it's good, hard engineering. It takes blood, sweat, tears, and capital. But we're now at the point, and this is why the market's so exciting, we're now at the point where we've already demonstrated in lab settings what we need to do to deliver systems, not just in 2026 or 2027, but the systems we need for the performance of 2030. That's now demonstrated, and it's a matter of engineering and integrating these systems together. We now have on chips built standard semiconductor fabs performance that's an order of magnitude better than anything else out there, and at the level we need for these ultra-large-scale systems.
And Chris, which industries do you think are going to be quickest to adopt this technology in that 2 to 5 year time frame that you outlined?
Well, the right way of thinking about quantum computing is it allows you to replace large amounts of human discovery with computing. So it opens up a whole new set of problems to compute. So the obvious industries here are things like battery chemistry, renewable energy, drug discovery, where right now you have people in labs testing chemicals that you can replace with computing. But another very active market that's picking up right now is in the financial industry. If you look at some of the big banks out there, JP Morgan, for example, they have a team of over 100 PhDs working on quantum computing algorithms for trading and portfolio optimization.
Very interesting in terms of the financial sector. Chris, how do you compete with Google and IBM? They're all pushing ahead on this. They're investing heavily. Some of their choices and decisions around the hardware and the R&D is different to yours. How do you build a moat versus big tech?
That's a great question, and ultimately this comes down to the classic innovator's dilemma question. If anyone who works in software can easily say, well, Google could do it, so why should we try? But that's a completely crap way of looking at it. The right way of looking at this is, why does someone like Google or Amazon or IBM have an unfair advantage? And they only have an unfair advantage when they can use the same tools they already use to tackle these problems. The really fascinating thing about quantum computing is that it's so different from classical computing. The way you have to tackle the problems is different. The technologies you use are different. The skill sets you require are different. So that means Google and IBM actually have a disadvantage compared to startups like us, because they have very large market expectations. So you can't get a foothold market. They have to go big or go home.
Chris, how should we think about... Look, you're in the process, Oxford Ionics, of being bought by IonQ, a big US quantum computing company. Are you another example of a British gem of innovation and technology being gobbled up by a US giant? Is this a loss for the UK?
This is about the business logic of the combination. This is nothing about the US or the UK. We're in a global market, and the deal will be similarly attractive if IonQ was a UK company and Oxford Ionics was a US company. What's really exciting about this particular deal is that at Oxford Ionics we have this core technology which now has performance better than anything else out there, with chips built in standard semiconductor fabs. But IonQ has been working on developing applications alongside customers like AstraZeneca, like some of the large banks, some of the large industries. And they now have these systems deployed in the field. They've been operating quantum computers on all of the large cloud providers, AWS, Azure, Google Cloud, since before Oxford Ionics was founded. So when we put these two teams together, it allows us to shave a combined 2 years of our roadmap. And that's really exciting.
OK, Chris, before we let you go, briefly, who wins the race? This is a geopolitical race to some extent. The US, China, the UK. Who's winning at this point? Who ultimately wins?
Right now, Western-aligned countries are clearly ahead on quantum computing. China is investing heavily right now. So at the moment, it's really about how do we, in the free markets, properly invest and double down on this technology and get the winnings before places like China do.
Chris, really fascinating. Chris Ballance, co-founder and CEO of Oxford Ionics, with big investment plans for that business as well in and around Oxford. Chris, thank you for your time. Now, some of the stories making the news this Friday. The UK government says it will buy 6 new land sector systems from multinational European arms maker MBDA over 3 years in a deal worth £118 million. They include so-called anti-air modular missiles capable of hitting a tennis ball-sized object travelling at twice the speed of sound, as well as launchers and support vehicles. Talking of geopolitics. Meanwhile, shares of WH Smith slumped 42%, the most on record after the discovery of an accounting error forced it to slash its profit outlook in North America. It's a major setback in a key growth market for the British retailer. A financial review found an overstatement of about £30 million in expected headline trading profit for North America this financial year. The error came after it booked income from suppliers earlier than it should have. And the UK's tax authority is tightening up scrutiny on pensions relief claimed by higher earners. This, according to the Financial Times and the Telegraph. The moves include a clampdown on claims made on the phone and stricter checks, for example, asking for evidence when it may previously not have been required. According to the reports, a review by the tax office found around a third of claims under £10,000 were incorrect. Plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So as we think about what Jay Powell will be saying at Jackson Hole later today and whether or not he pushes back on bets around the first cut of this year for the Fed, in September. Here's a broader look in terms of how markets and traders have been paring their bets on easing across central banks globally. And you can see these adjustments. This is where you're starting to get some bets at the back end of 2024, early part of 2025, expectations that there will be pretty significant interest rate cuts. And those, as you can see, have faded and been reduced. And that's largely because the global economy is frankly showing resilience that many did not expect in the face of Trump's trade war. And you saw that reiterated and underscored by the PMI data out of Europe, out of the US and out of the UK in the last few days. The relative resilience of this global economy to that trade war means that bets on central bank easing have faded and been paired globally, not just when it comes to the Fed. Talking about relative resilience, let's flip the board and have a look what's happening here in the UK, because the latest GSK consumer confidence showing there's been a pretty marked tick up in the UK, despite concerns about inflation. Largely, it seems, because those interest rate cuts from Bank of England has actually led to lower rates when it comes to mortgages. That seems to be a big factor. That is leading to the UK consumer here feeling a little bit more confident. This is personal finances outlook. That's ticked up. That's the yellow line. The white line, where you see a pretty significant tick up, is overall consumer confidence. That's the highest level since December. So the consumer here in the UK feeling a little bit more robust. But how long does that last, given the inflation tick up we have seen, and particularly if the BOE doesn't go again, as some in the markets are predicting? Let's flip the board and have a little look at what's happening in terms of geopolitics, because Peter Navarro, again, taking a swing at India and criticism over that country's purchases of Russian oil, the biggest purchaser of Russian oil, and saying that those 50% tariffs that have been pledged by the Trump administration will kick in next week. That's his expectation. This is the buying coming through from India, even as China's buying of Russian crude has fallen. India buys about 37% of all Russian oil. Stay with us for full coverage, of course, of Jackson Hole, the Economic Symposium, including interviews with current and former Fed presidents. It starts at 2 p.m. London time. This is where your focus needs to be. Before that, the opening trade with the setup. Stay with us. This is Bloomberg.